Based on the historical data and forecast, Bitcoin shows a strong upward trend. The price has consistently tested and bounced off the support price of $96,800, and the forecast indicates continued upward momentum. The RSI consistently stays above 60, indicating bullish sentiment, and the price is approaching the upper Bollinger Band, suggesting a potential for further gains. I recommend a long position strategy. We will enter a long position at $101,200, placing a stop-loss order at $100,500 to protect against potential downturns. Our target price will be $109,100, aligning with the forecast for May 16, 2025. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will initiate a long position at the prevailing price, setting a stop-loss at $500 below the entry price and a target price at the nearest resistance level. Conversely, if the RSI exceeds 80, signaling an overbought condition, we will consider a short position, placing a stop-loss above the entry price and a target price at the nearest support level. Combining these three strategies, we will prioritize the long position strategy, as the overall trend is bullish. This diversified approach aims to maximize returns while mitigating risk. Based on the historical data and forecast, Ethereum exhibits a strong upward trend, particularly evident in the recent surge from $1,800 to $2,350. The RSI consistently moved above 50, reaching overbought levels of 81.7, suggesting a potential pullback is imminent, but the overall trend remains bullish. The forecast data projects continued upward momentum, with prices expected to reach $2,510. Therefore, I recommend a strategy that capitalizes on this bullish trend while incorporating risk management. I propose a buy strategy with an entry price of $2,110, coinciding with the first day of the forecast period. Given the recent overbought RSI and the Bollinger Bands, place a stop-loss order at $2,050 to protect against a potential pullback. For the target price, I suggest $2,430, aligning with the forecast peak and providing a substantial profit margin. This strategy combines the bullish forecast with technical indicators to manage risk and maximize potential returns, aiming for a high-return investment. Based on the historical data and forecast, XRP shows a slight upward trend with price fluctuations. The RSI indicates periods of both overbought and oversold conditions, suggesting potential for short-term gains. The Bollinger Bands indicate periods of volatility, with the price often testing the upper and lower bands. Considering the support price of $2.3 and the forecast for May 10, 2025, at $2.28, I recommend a long position. Enter a long position at $2.28 with a stop-loss order at $2.25 to limit potential losses. The initial target price should be $2.4, aligning with the resistance level and anticipating a potential breakout. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. If the RSI falls below 30, consider entering a long position at the prevailing price, setting a stop-loss at $2.25 and a target price of $2.45. Conversely, if the price touches the lower Bollinger Band, enter a long position at that price, with a stop-loss at $2.25 and a target price of $2.4. The most efficient portfolio combines these approaches, prioritizing the forecast price and RSI signals. This strategy aims to capitalize on short-term price movements while mitigating risk through strategically placed stop-loss orders. Based on the historical data and forecast, BNB shows a clear uptrend, supported by the recent price surge to $666 and a projected increase to $728 over the next week. The RSI consistently above 50, with a peak of 74.4, indicates strengthening momentum. Combining this with the Bollinger Bands, we can implement a strategy focusing on capitalizing on upward movements. We will initiate a long position at $646, coinciding with the first forecast price. A stop-loss will be placed at $637, just below the support level, to mitigate potential losses. Our initial target price is $685, aligning with the forecast for May 12, 2025. To maximize returns and manage risk, we will employ a dynamic target adjustment based on the Bollinger Bands. If the price reaches the upper band, we will adjust the target price to $710, leveraging the continued bullish momentum. A final target price of $728 will be set based on the last forecast price. This strategy combines trend analysis, momentum indicators, and price projections to achieve high returns while incorporating robust risk management through strategically placed stop-loss orders. Based on the historical data and forecast, Solana shows a clear upward trend, particularly evident in the recent surge to $173 and the projected climb to $183. The RSI consistently moved above 60, indicating strengthening momentum. Furthermore, the forecast prices consistently exceed the support level of $146, reinforcing a bullish outlook. Our primary strategy will be a trend-following approach, capitalizing on this upward momentum. We will enter a long position at $163, placing a stop-loss order at $157, just below the recent bottom of the Bollinger Bands, to protect against potential pullbacks. Our initial target price will be $171, aligning with the forecast for May 13, 2025. To refine this strategy, we'll incorporate RSI signals. When the RSI dips below 30, consider a buy order. When the RSI exceeds 70, consider a sell order. Considering the current RSI of 75.7, we will hold the position and adjust the target price to $180, coinciding with the forecast for May 15, 2025. If the price reaches $180 and the RSI shows signs of overbought conditions, we will consider taking partial profits and moving the stop-loss order to $166 to lock in gains. This combined strategy, leveraging both trend following and RSI indicators, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Dogecoin shows a clear upward trend, especially considering the recent price surge from $0.172 to $0.206. The RSI consistently moving above 50, peaking at 71.1, suggests increasing bullish momentum. The forecast for the next week projects continued growth, reaching $0.219. Given these factors, I recommend a long position strategy focusing on capitalizing on this upward trajectory. We will use a combination of RSI and Bollinger Bands for precise entry and exit points. Our strategy involves entering a long position at $0.192 on May 10, 2025. The RSI is currently below 80, indicating room for further growth. The stop-loss will be set at $0.17, coinciding with the established support level, to protect against unexpected downturns. The initial target price is $0.214, aligning with the forecast price for May 15, 2025. If the price breaks through $0.214, we will adjust the target price to $0.219, the final forecast price for May 16, 2025. This strategy combines trend analysis, technical indicators, and price forecasts to maximize potential returns while mitigating risk. Based on the historical data and forecast, Cardano shows a clear upward trend. The price has been fluctuating within a range between 0.745 and 0.974, with recent support at 0.745. The RSI indicates that the asset is currently not overbought or oversold, hovering around the mid-50s to low 60s. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential for price movement. The forecast for the next week predicts a continued upward trajectory, with prices potentially reaching 0.835. Combining these factors, I recommend a long position with an entry price of $0.743. A stop-loss should be set just below the support level at $0.73 to protect against a potential pullback. The initial target price should be set at $0.823, aligning with the forecast high for the week. To refine the strategy, we'll incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, we'll consider entering a long position at the prevailing price, with a stop-loss at $0.73 and a target price of $0.835. Conversely, if the RSI exceeds 80, signaling an overbought condition, we'll consider a short position with an entry price at the prevailing price, a stop loss at $0.75, and a target price of $0.67. However, given the prevailing upward trend and positive forecast, I prioritize the long strategy. Therefore, the core strategy remains a long position with an entry price of $0.743, a stop loss at $0.73, and a target price of $0.823, adjusting the target price based on the RSI and Bollinger Band signals for optimal risk-reward ratio. Based on the historical data and forecast, TRON exhibits an upward trend. The RSI consistently fluctuates, but the recent values are above 50, indicating positive momentum. The Bollinger Bands show that the price is approaching the upper band, suggesting a potential for a short-term overbought condition. Considering these factors, I propose a strategy that combines RSI and Bollinger Band signals. Specifically, I recommend entering a long position when the RSI falls below 40 and the price touches the lower Bollinger Band. For example, if the RSI drops to 38 and the price reaches $0.239, enter a long position. Set a stop loss slightly below the lower Bollinger Band at $0.237 to mitigate potential losses. The target price should be set near the upper Bollinger Band, around $0.257, providing a reasonable profit margin. To further refine this strategy, I suggest incorporating support and resistance levels. If the price approaches the resistance level of $0.27, consider taking partial profits or tightening the stop loss. The forecast data indicates a price range between $0.259 and $0.271 for the next week, further supporting a bullish outlook. A more aggressive approach would be to enter a long position when the RSI is above 50 and the price is near the support level of $0.253. In this case, the entry price would be $0.253, with a stop loss at $0.248 and a target price of $0.266. Combining these signals can create a robust portfolio with high returns. Based on the historical data and forecast, SUI shows a clear upward trend, breaking through the resistance level of $4.03 on May 13, 2025. The RSI consistently fluctuates above 60, indicating bullish momentum, and recently approached the overbought level of 80. The Bollinger Bands also suggest a positive outlook, with the price consistently near the upper band. Therefore, I recommend a long position. We will enter a long position at $3.92, placing a stop-loss order at $3.88 to limit potential losses. The initial target price is set at $4.11, aiming to capitalize on the anticipated upward movement. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the RSI falls below 20, indicating an oversold condition, we will consider a long entry. Conversely, if the RSI exceeds 80, signaling an overbought condition, we will consider a short entry. Furthermore, if the price breaks above the upper Bollinger Band, we will initiate a long position, and if the price falls below the lower Bollinger Band, we will consider a short position. Combining these signals, we will maintain a long position with an entry at $3.92, a stop loss at $3.88, and a target price of $4.47, adjusting the target price based on subsequent RSI and Bollinger Band signals. Based on the historical data and forecast, Chainlink exhibits a clear upward trend, breaking through the support price of $15 and approaching the resistance level of $17.3. The RSI consistently fluctuates above 50, indicating bullish momentum, with recent values nearing 66.3, suggesting a potential pullback is imminent but not a trend reversal. The Bollinger Bands show that the price is currently near the upper band, further supporting the possibility of a short-term correction. Considering these factors, I recommend a strategy that capitalizes on the anticipated upward movement while mitigating risk. My recommended strategy involves a phased entry approach. Initially, I suggest entering a long position at $15.4, with a stop-loss set at $14.2, just below the recent low and outside the Bollinger Band's lower limit. The first target price should be $16, aligning with the upper Bollinger Band. If the price reaches $16, consider scaling out 50% of the position and setting a trailing stop-loss at $15.7. For the remaining 50%, I suggest a second target price of $17, close to the resistance level. This phased approach allows for profit-taking while protecting against potential downside risks, maximizing returns while minimizing losses. Based on the historical data and forecast, ApeCoin shows a clear upward trend. The recent price surge to $0.648, combined with the forecast predicting prices above $0.578, suggests a bullish momentum. The RSI consistently above 50, nearing 71.6, indicates strengthening bullish sentiment, though it approaches overbought territory. We will combine 3 strategies to maximize returns. Firstly, we will implement an RSI-based strategy. When the RSI dips below 20, oversold, we will enter a long position. Secondly, we will utilize the Bollinger Bands. When the price touches the lower band, indicating potential undervaluation, we will enter a long position. Finally, we will incorporate support and resistance levels. Our core strategy will be a combination of Bollinger Bands and support levels. We will enter a long position at $0.578, coinciding with the initial forecast price and the lower Bollinger Band. Our stop loss will be set just below the support level at $0.54 to protect against potential downside risks. We will target a price of $0.688, aligning with the forecast high for the week and the upper Bollinger Band. This strategy aims to capitalize on the anticipated upward trend while mitigating risk with a well-defined stop loss. The RSI nearing overbought levels suggests taking profits at $0.688 to secure gains and avoid potential corrections. This portfolio will provide high returns with a moderate risk. Based on the historical data and forecast, Pepe shows a clear upward trend. The price has been fluctuating within a range, but the recent RSI values above 70 indicate an overbought condition, suggesting a potential pullback before further gains. The forecast for the next week projects continued price increases. Considering the support price of $0.0000110 and the resistance price of $0.0000132, I recommend a strategy combining RSI and Bollinger Bands. The strategy is to buy when the RSI falls below 30 and the price touches the lower Bollinger Band, and sell when the RSI reaches 80 and the price touches the upper Bollinger Band. Therefore, the entry price will be $0.0000105 when the RSI falls below 30 and the price touches the lower Bollinger Band on May 10, 2025. The stop loss price will be set at $0.0000110, just below the support level, to limit potential losses. The target price will be $0.0000138, aligning with the forecast for May 16, 2025, and the upper Bollinger Band. This combined strategy aims to capitalize on both momentum and volatility, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Celestia shows a clear upward trend. The price has been fluctuating within the support of $2.77 and the resistance of $3.23. The recent RSI values indicate that the asset is approaching oversold conditions, with a low of 36.7, suggesting a potential buying opportunity. Furthermore, the Bollinger Bands are widening, indicating increased volatility and potential for price movement. Considering the forecast for the next week, which predicts a steady increase to $3.1, I recommend a long position. My strategy involves entering a long position at $2.72. Given the current oversold RSI and the upward trend, I will set a stop loss at $2.63, just below the center of the Bollinger Bands, to limit potential losses. The initial target price will be $2.9, aligning with the forecast and the upper Bollinger Band. If the price breaks through $2.9, I will raise the target price to $3.02, based on the forecast for May 16, 2025. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, Jito shows a clear upward trend, particularly evident in the recent price surge to $2.01 and the forecasted prices hovering around $1.81 to $2.09. The RSI consistently moving above 50, with peaks above 60, indicates strengthening momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels to maximize returns. Our primary strategy will be a buy-on-dip approach, capitalizing on temporary pullbacks to take advantage of the overall uptrend. Our strategy involves entering a long position when the price dips to the bottom of the Bollinger Bands, specifically around $1.53 to $1.54. The entry price will be $1.54. We will set a stop-loss order at $1.5, just below the bottom Bollinger Band, to limit potential losses. The initial target price will be $1.85, aligning with the established support level and the center of the Bollinger Bands. If the price reaches $1.85, we will move the stop-loss to break even to protect profits. The secondary target price will be $2.09, based on the forecast data, offering a significant potential gain. This portfolio combines the strengths of each indicator, providing a robust and adaptive approach to capitalize on the upward trend of Jito. Based on the historical data and forecast, movement exhibits a downtrend, consistently testing the support level of $0.158. The RSI values have remained consistently below 50, indicating a prevailing bearish sentiment. The Bollinger Bands are narrowing, suggesting decreasing volatility. Given this analysis, I recommend a short position strategy. We will enter a short position at $0.164. The stop-loss will be set at $0.161 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.152, aiming to capitalize on the continued downward trend. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, oversold, consider covering the short position, as a potential rebound may occur. Conversely, if the price touches the bottom of the Bollinger Bands, it could indicate a potential bounce, and we should reassess our position. If the price reaches $0.152, we can adjust the target price to $0.154, further maximizing potential gains. The final target price will be $0.153. This layered approach allows for flexibility and adaptation to changing market conditions, while maintaining a focus on the overall downtrend. Based on the historical data and forecast, Starknet has shown significant volatility, with a recent downtrend followed by a potential reversal. The RSI indicates that the asset is currently in the oversold territory, with readings consistently below 50, suggesting a potential buying opportunity. The Bollinger Bands are widening, indicating increased volatility and potential for price movement. The forecast suggests an upward trend, with prices expected to rise from $0.151 to $0.178. Therefore, I recommend a long position with an entry price of $0.151. To manage risk, set a stop-loss order at $0.14, just below the recent support level. For the target price, aim for $0.178, aligning with the forecast high. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it's a strong buy signal. Conversely, when the RSI exceeds 70, indicating an overbought condition, and the price touches the upper Bollinger Band, it's a sell signal. Given the current oversold conditions, I will enter the trade at $0.151 with a stop-loss at $0.14. The initial target price will be $0.171, corresponding to the first forecast price. If the price reaches $0.171 and the RSI remains below 80, consider moving the stop-loss to break even to secure profits and potentially ride the upward momentum further. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, official Trump shows a clear upward trend despite some volatility. The RSI consistently fluctuates around the 50 mark, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a potential upward movement, with prices expected to rise from $13.5 to $15.4 over the next week. Considering the support price of $11.9 and the resistance price of $16.4, we can implement a combined strategy using RSI and Bollinger Bands to maximize returns. We will initiate a long position when the price touches the lower Bollinger Band and the RSI falls below 30, indicating an oversold condition. For example, if the price drops to $13.1 and the RSI is 28, enter a long position at $13.1. Set a stop-loss order at $11.9, just below the support price, to limit potential losses. The initial target price will be $14.6, aligning with the forecast price and the upper Bollinger Band. If the price continues to rise and breaks above $14.6, we will adjust the target price to $15.4, based on the latest forecast. This combined strategy leverages both technical indicators to identify optimal entry and exit points, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Jupiter demonstrates a clear upward trend, breaking through the resistance of $0.469 and reaching $0.564. The RSI indicates that the asset is approaching overbought conditions, with a value of $70.9 on May 9, 2025. However, the forecast suggests continued upward momentum, with prices predicted to reach $0.585 by May 16, 2025. Therefore, I recommend a long position with an entry price of $0.494. Place a stop-loss order at $0.469, just below the support level, to protect against potential downside risks. Set a target price of $0.585, aligning with the forecast high for the week, to capitalize on the anticipated upward movement. To refine this strategy, I'll incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential pullback is imminent. We can use this to our advantage. If the price touches the upper Bollinger Band of $0.516, consider tightening the stop-loss to $0.502. If the price breaks through the upper Bollinger Band and continues to rise, maintain the initial target price of $0.585. This combined strategy leverages both momentum and volatility, aiming for high returns while mitigating risk through strategic stop-loss adjustments. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, PYTH network shows a clear upward trend. The price has been fluctuating but generally trending upwards, supported by the recent surge to $0.193. The RSI indicates that the asset is currently approaching overbought territory, with a reading of 70.4 on May 9, 2025. However, the forecast suggests continued upward momentum, with prices projected to reach $0.196 by May 16, 2025. Considering this, I recommend a long position with an entry price of $0.163 on May 10, 2025. A stop-loss should be placed at $0.158, just below the support price of $0.16, to limit potential losses. The target price for this trade is $0.20, based on the resistance level and the projected upward trend. To further refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential pullback. However, the forecast indicates the price will continue to rise, so we will maintain the long position. If the price breaks below the lower Bollinger Band, $0.124 on May 9, 2025, it would signal a trend reversal, and the stop-loss should be adjusted to $0.15. If the price reaches the target of $0.20, consider taking partial profits and trailing the stop-loss to protect gains. This combined strategy, utilizing RSI, Bollinger Bands, and support/resistance levels, offers a balanced approach to capitalize on the anticipated upward trend while mitigating risk. Based on the historical data and forecast, PNUT the Squirrel shows a strong upward trend, particularly evident in the recent price surge to $0.383 and the forecasted prices reaching $0.397. The RSI consistently above 60 indicates bullish momentum, with a recent peak above 80 suggesting a potential pullback but overall positive sentiment. The Bollinger Bands are widening, confirming increasing volatility and the potential for further price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.256, placing a stop-loss order at $0.267, just above the support level to mitigate potential losses if the trend reverses. Our initial target price will be $0.304, aligning with the first forecast price and a reasonable profit margin. To capitalize on the anticipated upward trend, we will implement a trailing stop-loss strategy. Once the price reaches $0.304, we will adjust the stop-loss to $0.27, securing profits while allowing for further upside potential. If the price continues to rise, we will further adjust the stop-loss to $0.288 and finally to $0.326. The final target price will be $0.397, coinciding with the last forecast price and representing a substantial return on investment. This strategy combines RSI-based entry and exit signals with Bollinger Bands confirmation and support/resistance levels for a comprehensive and potentially high-yielding investment approach.